A small cap company, strong growth trajectory, attractive pricing, MAITHAN Alloys Limited. MAITHAN Alloys Limited, a small cap company with a market capitalization of around 3,150 crores as against its TTM profit of 949 crores. The resulting PE multiple is at an all-time low of 3.3, which is far below the median of 6.3 and remains quite attractive. Even from a book value perspective, the current market price carries a nominal premium of 20% to book value and is a bargain. MAITHAN is India's largest and cost-efficient manufacturer of manganese alloys. It produces silicomanganese, ferromanganese and ferrosilicon, which are used as a consumable in the manufacture of steel. Company's initial plant in West Bengal Kalyaneshwari and its plant in Meghalaya Birnihat cater to the domestic market. Company's largest plant in Visakhapatnam is predominantly export oriented. In FY22, company acquired the plant at Bobili, which caters to domestic market. MAITHAN implementing its ambitious greenfield project of 1 lakh ton per annum capacity at Bankura, West Bengal. Project cost 250 crores met out of internal accruals to be commissioned by end of FY25. On completion, addition to the turnover will be almost 1/3, a great value unlock. MAITHAN has remained an efficient converter both in terms of revenue and margin. Its performance has been quite evident quarter after quarter in both revenue and EBITDA percentage, more particularly during the last 7 quarters starting December 20, wherein the EBITDA percentage was 15.7, which peaked to 42.6 by December 21. There has been a fall subsequently with major impact in Q2 due to input inflation and power tariff going up, but company's strength has remained to be better realization and higher margin as compared to its peers. MAITHAN's growth rate on a TTM basis over a period of 3 years is quite impressive. Revenue with a 3-year CAGR of 20% moving upwards for nearer periods of 2 year and 1 year. Similar growth rate is evident in PAT, which has moved from 58% of 3-year upwards for closer intervals. PAT percentage has more than doubled during the period from 11 to 25.4, and so also EBITDA percentage from 14 to 33.7. Very impressive and consistent delivery. MAITHAN's cash flow quite unique. Operational cash flow averaging about 200 crores annually. After working capital adjustment, significant amount of surplus during the last 2 completed years, averaging around 160 crores, and the amount is substantially high for the 6 months ended 30th September 22. Very subdued fixed assets investment except in FY22 for inorganic growth, poor payout and very nominal dividend yield. MAITHAN's balance sheet, a picture of strength, growing equity, supporting growth of assets every year, funding almost 80% of the total assets for the past few years. Company has remained near debt free and its capital allocation discipline has helped generate impressive ROCE in excess of 40%. MAITHAN's daily chart is significant for its current market price of 1077 being very close to the crucial Fibonacci retracement level of 38.2, which it has tried to breach more than once in January 2022, then in May and September, and 4th time it is trying now. Any success at this stage might prove quite positive, and incidentally the current market price keeps a discount of 32% to 52-week high of 1596. MAITHAN's price movement is quite significant as the current market price is placed well above all the 4 averages of 20, 50, 100 and 200 EMA, and the upward movement of price is supported by price action in terms of growing volume and order size. Out of its domestic revenues, almost two-thirds comes from sale, and on the export front, MAITHAN constitutes 8% of ferroalloy exports, but its overall realizations are totally linked to the fortunes of steel sector, which is both a positive and also a negative in the present circumstances. MAITHAN's imports of manganese from South Africa and Australia and its import of coke for Vizag plant from South Africa and Colombia, along with its realization of export proceeds, exposes MAITHAN to foreign exchange fluctuation, which is one of the risk factors. Q2 FY23 was an anticlimax, exposing the company to multiple risks, including fall in sales realization and input inflation. Power cut forced the company to close a furnace in Boboli production unit, thereby reducing its production. Tariff hike in power compelled the company to provide for more than 100 crores as prior year exceptional expenses, which hurt the overall profitability of H1 FY23. While the continued holding of 75% by the promoters is a strong positive for the company, its impact, however, on the managerial style is not an advantage. MAITHAN's positives: strong PE, operating costs being low, capacity utilization above 85%, greenfield expansion, great value, better margin realized as compared to peers, TTM CAGR quite impressive, price up move likely to continue, strong cash generation from operations, and closer to being a debt-free company. Among the negatives: steel sector link for all prosperity, prevailing input inflation, recent fall in realization, and proprietary style of closely held company management. Hope you found this video on MAITHAN Alloys interesting and useful. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar resourceful videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your valuable time and kind support. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.